Good morning. Warren Buffett once famously said that capitalists around the world would have been better off if someone was present with Orwell and Wright at Kitty Hawk and shot them down before they ever took flight. What he meant by that is that the airline industry has been a terrible place for investors to put their money for many, many years. It combines some of the worst characteristics of any business, with very high operating leverage, commoditized pricing, strong unions, and high financial leverage. Today, I want to give you an update on a new investment position in our investment partnership. My name is Lukasz Tomicki. I'm the president and portfolio manager of LRT Capital, and I too am an Aeroholic. As you may have guessed by now, our new investment position is in the airline industry. We are currently long shares of Ryanair, the European equivalent of Southwest. And I hope this new investment demonstrates the flexibility of our investment strategy and how we are looking for investments anywhere in the world. At our fund, at LRT, we're looking for investments for equity securities with three characteristics. We're looking for some kind of moat, a strong and durable competitive advantage, the ability to grow and reinvest, and a management team that excels at capital allocation. So let me briefly tell you how Ryanair fits into those criteria and why we have decided to purchase shares in Ryanair just now. Ryanair is the low-cost operator in the European airline industry. It is the very close equivalent of Southwest. It has a low-cost strategy, and that results in a low price to consumers. Now you have to remember, being low price is never a strategy. Low price must be backed up by a low cost structure. And Ryanair's cost structure cannot be matched by any of the incumbent airlines or any of the imitators that have tried to come after it. Ryanair flies a single type of airplane, the Boeing 737, flies to secondary airports generally, and uses fast turnarounds and direct sales for their website to generate their sales. They have the lowest possible cost structure of any airline in the European Union, and this translates into a low price. And low price in the airline industry, in the short-haul airline industry, is key. In fact, it's almost everything. People say they want all sorts of things in an airline. They want nice food, nice snacks, great service, beautiful planes, etc. The truth is people want three things. They want a low price, they want an on-time flight, and they don't want to have their luggage lost on the way. And on those criteria, Ryanair delivers. And that sustainable competitive advantage is what has allowed them to have very high load factors on their planes and has allowed them to continue to grow market share and traffic over the last 20 years. I believe it will continue to be the case for the next decade at least. Secondly, the key issue of growth. Ryanair still has enormous growth ahead of it. Today, the company operates about 450 aircraft and carries about 105 million passengers per year. By comparison, Southwest has 750 passengers. Yet, we know that the European Union has over 730 million residents, more than double that of the United States, suggesting that Ryanair can at least double the number of passengers and aircraft it operates over the next decade and potentially grow beyond that as well. So we believe growth is still there, despite having grown for over 2 decades now. There's still plenty of incumbents who are fat and happy and who deserve to have their traffic taken away from them. Third and final, the issue of capital allocation and management. The kind of moat the company has is what I feel should drive their management strategy. So in the case of Ryanair, their cost advantage is what they have, and that is the moat that they continue to deepen and expand. So with that, Ryanair has done two things in an exceptional way. They've continued to buy back their shares at very attractive prices, and they've been able to acquire aircraft from Boeing in a counter-cyclical way when aircraft prices were relatively low. And they've been able to hedge their purchases on a euro-dollar exchange rate that's far better than the current rate. The company is going to be taking delivery of over 50 Boeing aircraft, the 737 MAX 200, later this year. And the MAX 200 is an aircraft specifically configured for Ryanair. It's actually going to carry 198 passengers. And 198 passengers will allow the Ryanair to service the flight with only 4 cabin crew, because regulation requires 1 cabin crew for every 50 passengers. So staying at just under the threshold of 200 allows them to have the lowest possible cost per passenger. And taking delivery of these new aircraft, notwithstanding the short-term problems Boeing has with the airplane, will allow Ryanair to continuously decrease their unit cost structure, somewhere between 17 to 20% in the foreseeable future. And you have to really admire management, as I do, and you listen to their conference calls and what they say. They're always willing to sacrifice short-term profitability for building the long-term moat. So in their most recent quarter, they were asked what would they do with their new aircraft deliveries if demand weakened. Would they still take the new airplanes if they saw weakening demand in the aviation space? And their answer was unequivocally yes. We're going to take the new aircraft and we're going to try to fill every seat we have. And in the worst case scenario, we would ground some of our older, less efficient planes rather than delaying the aircraft deliveries from Boeing. So I think you have a management team that's been very consistent and excellent at managing capital and managing the company. So in summary, you have a business with a strong and durable moat, in my view. You have growth opportunities, and you have a management team that's shareholder focused and an excellent steward of capital. So why have we purchased shares just recently? There's a number of short-term factors affecting the profitability of Ryanair that we believe are temporary and short-term in nature, and that their margins will rise substantially over the next 18 months. Even if the economy in Europe weakens or oil prices rise, Ryanair stands to benefit as consumers become more price sensitive and switch from full price carriers into the lower cost carriers such as Ryanair. We believe this is a unique opportunity to purchase shares in Ryanair because they trade at the lowest valuation that they've been at for over a decade. So we expect great things from our new investment, and I look forward to talking to you and discussing in detail why we've made this decision to purchase Ryanair right now and why it may seem counterintuitive given the things I've said in our investment letters and the need to be defensive, and how Ryanair in fact is a very defensive company given the current environment. Thank you for listening, and I look forward to hearing from you.